Hello everyone, welcome back to part 3 of chapter 1. In our previous lesson, we learned about factor income, transfer income, domestic territory and normal resident. Today we will understand 5 concepts that are extremely important because they will be used throughout the chapter when we study GDP, GNP, NDP, NNP and national income. If you understand today's lesson well, the numerical and theoretical questions later in the chapter will become much easier. All these concepts are interconnected. We will learn them one by one and then connect them together. This connection is very important because it forms the basis of national income accounting. See, investment means spending on capital goods such as machinery, equipment, buildings, or tools that help produce other goods and services. Gross investment is the total amount spent on these capital goods during a year. However, machines don't remain new forever. As they are used, they wear out. So if factory spends 100 crore on new machinery during the year, but 20 rupees crore of existing machinery loses value due to wear and tear, then the actual addition to capital stock is only 80 crore. So it gives us the formula: net investment is equals to gross investment minus depreciation. So think of gross investment as the total money spent, while net investment is the actual increase in productive capacity. See, the other name of depreciation is consumption of fixed capital. It is a reduction in the value of fixed assets over time. Why does this happen? Firstly, because of regular use, machines become old with continuous production. Secondly, simply because the time passes. Even if a machine isn't used much, it may lose its value. Third, due to technological improvement, a perfectly working machine may become outdated if a newer and more efficient model enters the market. Depreciation is a very important cost because businesses needs to replace worn out assets in the future. So remember that depreciation and consumption of fixed capital refer to the same concept in CBSE economics. Don't get confused. Now let's generalize what we have just learned. Whenever you see the word gross, it means depreciation has not been deducted. Whenever you see the word net, it means depreciation has been deducted. For example, gross domestic product becomes net domestic product after subtracting depreciation. Similarly, gross national product becomes net national product after subtracting depreciation. This simple rule will help you remember all the major income concepts. Students often confuse domestic and national concepts. A domestic concept focuses on where production takes place. If production happens within domestic territory, it is called as domestic concept. A national concept focuses on who earns the income. If the income is earned by India's normal resident, it belongs to a national concept, even if a part of it is earned abroad. So now by this time you should know what is normal resident. The link between the two is net factor income from abroad, or NFIA. So we can write national is equals to domestic plus NFIA. So we will study NFIA in detail later, but remember this relationship now. Finally, let's understand market price and factor cost. The market price is the amount the buyer pays when purchasing a product. This price includes indirect tax such as GST and affected by subsidies provided by government. Factor cost, however, represent the income actually received by factors of production, that is land, labor, capital, entrepreneurship. That's why the formula is factor cost is equals to market price minus indirect tax plus subsidies. The relationship is very important because it appears repeatedly in national income calculations. These 4 formulas are the backbone of today's lesson. If you memorize them and understand what each term means, you will find the upcoming chapters much easier. So you can note it down or take screenshot for your reference. Now pause the video and try to answer the quick quiz questions and type your answer in the comment box. I will pin the correct answers in the comment box itself. Congratulations, you have now completed the essential concepts required before we begin the measuring national income. In the next lesson, we will start the actual calculation concepts, including GDP, GNP, NDP, NNP, and national income. If you found this lesson helpful, like the video, subscribe to the channel, and share it with your classmates. See you in the next lesson, and I'll be posting some calculation question in the shorts. Go check it out.